And if we scroll down here, we're looking for job 14 and job 15. So we're going to scroll over all the way over to our job sheets over here. And we have job 14, which is 186,000, and job 15, I'm going to hold down control, which is 314,000. That adds up to 500,000. So 500,000 is the amount that we're going to transfer from work in process to finished goods. So I'm going to scroll all the way back over here. So both the debit, 500,000 to finished goods, and the credit of 500,000 to work in process. That's the transaction. Let's make this smaller on the taskbar like so, and scroll over here and post this out. So we're going to post the finished goods here. Here it is on the trial balance. Here's the finished goods on the general ledger. We are on the debit side in U18 equals, pointing to that 500,000. That brings the balance up in the debit direction. Then we're looking for work in process. Here it is on the journal entry. Here it is on the trial balance. And work in process is right here. We are on the credit side this time, reducing work in process in cell V12 equals, and pointing to 500,000, bringing our balance down. Now note that what we did is we brought down the work in process to 260. We're going to have to do something with our backup account now in order to back that number up in our jobs cost sheets. Because if we go over here to the job cost sheets, we still see the job cost sheets here. We still see them. So we have to indicate in some way on the job cost sheets that, hey, we transferred these jobs. They're no longer in work in process. They shouldn't be included in this number. They shouldn't be in here. So how do we take it out of there? Well, there's different softwares that'll do that. But in this case, we could say, well, this is no longer an open job. We can say that it is now a closed job. Maybe just highlight the fact that it's now closed like so. And therefore, it needs to be removed from the yellow area here. So we can say this job is closed. We'll make it green like that. So this should only include the yellow jobs which are open, indicating that they are open. So this one's open. Maybe this should be yellow too. Okay, so I'm going to double click on that then. That means that, or we could just delete it, and I'm going to say that the new entry should just be this job. That's all it should be in there. And that means that now ties out to the work in process. So the green jobs are now closed out. And the only open jobs that are being backed up by this cost sheet now are the ones that have not yet been transferred to finished goods, being the 260. So we can see that 260 just includes that job. That 260 is what is in work in process. And of course, we could see what's in finished goods too. The 500 being, in this case, the 186 and the 314 adds up to the 500. Okay, and then once we transfer it out of there, I'm going to say it's shipped. All right, we also see the work in process and the finished goods over here on the trial balance, respectively, at the 260 and 500. All right, let's make it larger again, back up to 100% on this side, scrolling back over to the left. We are now on the next transaction, which says that we, on 131, record sale of job 14. So we sold job 14 for $380,000. So we are on 131. Okay, so we sold a job. Now we can think of the first half of the sale just like any type of sale. We made a sale. What happens when we make a sale? Well, we think, is cash affected? In this case, did we sell it for cash? Yeah, we did. So cash is affected. Cash is going up by the 380. So cash has a debit balance. We're going to make it go up by doing the same thing to it, which in this case is another debit. So I'm going to copy cash. I'm going to put that up in H13, right click, paste 1, 2, 3. And then we're going to credit income, or in this case, sales. So this is the actual sale that happened. So we're down here in sales. Sales have credit balances. We're going to make it go up by doing the same thing to it, which is another credit. Just like any sale, this is just a normal transaction for any type of business where we generated revenue and got cash for it. We increased cash. We increased the revenue account. Cash is being debited. Revenue is being credited. And I just did the wrong thing. I'm going to right click and copy. And our revenue account being called sales in this case because we sell stuff. And we have the amount of 380. Now, a lot of people are going to get confused on the 380. We're saying, well, how did we come up with the 380, that arbitrary number? Why don't we, don't we have to look at the job cost sheet in some way to think about how much we sold it for? And notice that we might get the sales price from the job cost sheet, meaning we might have a rule that we're saying, hey, whatever the cost of the project is, we're going to mark it up by 30%, meaning we might use the job cost sheet to come up with the sales price. But the cost is what we've been tracking, not the sales price. The sales price should, of course, be higher than the cost unless we underbid the job. But notice that in a lot of problems, they might just give you the sales price, and or they might not even talk about the sales price and just talk about the movement of the inventory. So when we start thinking about the inventory, a lot of times it gets confusing because we tend to ignore the sales side of things and lose sight of the fact that the sales is going to be slightly different than what we've been working on. We've been working on tracking the cost the whole time. So we might use the cost in order to come up with the sales price, but many problems might just give you the sales price, and then we have to record the other half of the journal entry, which is similar to the other half of any journal entry if we were a merchandising company, and that is that we have now reduced the inventory, meaning our inventory now being the finished inventory, because we're not going to sell the stuff that's in process unless someone wants to finish it themselves and we're going to sell it at a discount or something. But otherwise, we're probably going to sell the inventory that has been completed, and it has a debit balance. We're going to make it go down, so I'm going to copy that. I'm going to skip a line and skip another line to put it on the bottom, so we're going to credit that. And if we're going to credit the finished goods, then we're going to debit the expense related to us giving up the inventory. That expense is finally called cost of goods sold. So just like in a merchandising company, we're selling the inventory, we're expensing it in the form of cost of goods sold. So I'm going to copy the cost of goods sold. I'm going to paste that in cell H16, right click, paste 1, 2, 3. So we're going to have to get this information from, of course, the job cost sheet. So this is the number that's going to come from the job cost sheet, the reduction in the inventory, and the expensing of the cost of goods sold. So we sold job 14. Let's scroll over to our job cost sheet and see what's in job 14. Here it is. I'm going to say now it's closed. So I'm going to make it a different color again. Let's make it like blue. Maybe blue is closed. So it's no longer here. We're going to say it's closed or shipped. It's been shipped, meaning it's closed. All right, so now we have it over there, and the amount in there is the 186. So notice that at this point in time, we're finally going to expense all this stuff. We're expensing the materials, the direct labor, and all the overhead, all the rents and stuff that we applied to this particular job. We're expensing at this point in time in the form of cost of goods sold, because that's the point in time that it helped us to generate revenue, and that's the point in time we expense things under the matching principle, which is an accrual principle. So 186,000. So we're going to scroll over here. 186,000, credit 186,000. Also note that these two things basically happen at the same point in time, but it's a lot easier most of the time to think of them as two separate journal entries. So we're going to think of the sales half, cash and sales, and then the reduction of inventory and the recording the cost of goods sold as two entries, even though they're happening at the same point of time. So I'm going to make this smaller, back down to 80. We're going to post this out. We're going to post cash first. Scroll over here a bit. So here's cash. Here's cash on the trial balance. We are in the debit side, so we are in Q13. And point to the cash of the 380, bringing our balance back up to 534. Now we're going to post the sales. So here's sales here, here's sales way down here. So it's going to be way over here in the dark blue, first dark blue in AD. So it's in AD 13. So I'm going to select equals and go way back over here to the 380. And that's going to hit enter. And what that does is it increased the sales. So notice that increases sales. It's represented by a credit. That's not a negative number. Net income is now including just that number. So all this stuff that we've done, we haven't recorded any expenses, even though we've paid the utility bill and we've paid certain salaries and whatnot, because all that went into our assets up here. So we only have revenue at this time until, of course, we report and record the cost of goods sold. So here's the cost of goods sold. Here it is on our income statement. It's going to be over here, way over here on the general ledger. It's going to be a debit in AC18 and equals, and we're going to point to that 186 and enter. So note that the net income on this transaction is the revenue we got as 380 minus the cost of goods sold, 186. We've got the 194,000. Again, that 186 includes so many things that we've been talking about, right? It's got the direct labor, it's got the direct materials, it's got the overhead. All right, so then we have the finished goods is here, finished goods is here on the trial balance, and finished goods is over here on the general ledger. We are in V19 equals, pointing to the 186,000, brings the finished goods down. So now we have in finished goods just the 314. If we scroll over to our jobs, all that's in the finished goods is the 314 now. We still have in open jobs just job 16 of the 260, and in the work in progress we have the 186. Okay, so then we're gonna have one more thing happen here. So we're gonna make this larger. We're almost done. We almost have to stop because we have completed this very entertaining problem. So now we're down to adjust for any under-appropriated or over-appropriated factory overhead. All right, so what are they talking about? So remember, if we look at the factory overhead, then we're done with the period here, and we have 3,000 negative in factory, 3,000 credit in factory overhead. What does that mean? Well, if we think of factory overhead kind of like part of inventory, it's part of the work in process and the raw materials, the finished goods and overhead are all the things that kind of we're using to record inventory. The work in process is where we put a bunch of stuff, all the stuff we couldn't apply to the job, and then we applied it to the jobs using a predetermined rate. Now that predetermined rate is just an estimate. We had to come up with an estimate. An estimate is never going to be perfect. And therefore, in this case, we applied out more to the jobs based on the predetermined rate than we actually expensed or included or debited or increased factory overhead by. So we over-applied the factory overhead. Now, there's a couple of ways we can treat that. Usually, if we say, hey, that factory overhead is pretty small, we were pretty close, 3,000 in relation to the rest of the numbers isn't too far off, then we just want to make that 0 so that when we start over next month, it's at 0. We don't want to start off with 3,000 in it. So what we're going to do is we're just going to make that go to 0, and we're going to put the difference to cost of goods sold. So this is going to look kind of like a funny entry. It's going to go the wrong way, meaning it's going to be a credit to cost of goods sold, which is unusual because cost of goods sold is an expense basically, and it usually only goes up in the debit direction. But the reasoning behind this is that, it's just an estimate, and the related account on the income statement that will then clear out to retained earnings, so we'll never have to look at it again, is cost of goods sold. And because it's insignificant, then in relation to the other numbers, it's immaterial. Let's just clean it out to the income statement, the related account being cost of goods sold, close it out to retained earnings, and therefore we won't have to worry about it again when we start the next month over. So idea being that as of the end of the month, the 131, we have a credit balance in here because the factory overhead was over applied. We need to make it go down to 0. How do we make something go down? We do the opposite thing to it, which in this case is a debit. So I'm going to copy that. We're going to put it on top in cell H19, right click, paste, 1, 2, 3. Debit for the 3,000. We're going to credit something. And again, what are we going to credit? We're just going to plug it into cost of goods sold. Therefore, it'll be closed out and we'll never see it again. And so we're going to put it into cost of goods sold. Notice cost of goods sold has a debit balance. It usually only goes up. You almost never credit cost of goods sold. This is an exception to the rule that we're actually going to credit cost of goods sold. So we're going to copy that. We're going to put that in H20, right click, and paste it 1, 2, 3. Going to make this a little smaller, back down to 80. Scroll back over here. Here's the factory overhead in I-19. Here's the factory overhead down here in column U, and we're way down here. And we have the credit balance. We have this 3,000 in it. I'm down here in V31, and we're going to say equals and point to that debit. And what we want to happen is for this 3,000 to hopefully go down to 0. So we've cleaned that out. We're out of balance by the 3,000, of course, now. Here's the cost of goods. That's where we're going to just plug the difference. Here's the cost of goods on the trial balance. It's way over here, last account over here on the general ledger. So we're going to credit it, which is kind of weird, but it's okay. This is the exception to the rule. Equals, I'm in AD19, pointing to that 3,000, and enter. So notice that affects net income by the 3,000 there for that adjustment. And so there we have it, and that's it.